but yeah, I was surprised. There's basically no conversation about the balance sheet. I think in part because from the Fed's perspective, Chairman Powell basically and sort of the Fed orthodoxy is that that balance sheet roll off has no impact on monetary conditions. And when I say no impact, I mean like literally there are papers written by the Fed that suggest that quantitative tightening has no impact on the economy. And that is crazy. And the reason why that is because, the selling of bonds or the reduction in the holding of duration by the Federal Reserve is an asset sale. And any asset sale has, should have an expected impact on asset prices in general. And so I think basically the Fed has every intention to just sort of quietly reduce the balance sheet, let QT run for a little bit. And, in the next couple meetings, probably they'll say that they've gotten the level of reserves and balance sheet size back to roughly where they want it to be. And then they'll stop. The thing that's interesting about that is it will likely compound the easing dynamic already at play, because, if you stop selling assets or effectively selling assets, they're rolling it off. But the point is the same, which is if the Fed is holding less duration, stops slowing the amount of duration or stops reducing the amount of duration that they're holding, that is on the margin stimulative. And so it'll probably be an additional point of stimulation, not huge, but just tack it on in as another indication of this over easy monetary policy.